The housing market collapse is here. We are going to see it happen in 2025 and 2026. We're going to see it happen on a level that we have not seen since back in 2008. Now, I've been saying this since October of 2024, and it technically already started last year. It's being artificially kept up, and we will talk about that here later in the video, because there's a big date that you want to pay attention to. There is a massive date for every single American when you're going to see the housing collapse go into a much faster pace than what we've been seeing. Because you already have markets like Austin, Texas, that have some areas have already fallen 30%. But we are talking about a 40 or 50% collapse in prices, something that we have not seen in almost over 2 decades. So when we talk about the housing market, there are a lot of different factors that go into this. We can get into a lot of deep data, which we have on this channel many times. One of the bigger things that you can stop and you can look at right now, if the stock market were to, if you were to see the S&P go up 200% in 1 year or in 2 years, the average person would say, well, the S&P probably needs to correct. We're probably going to see a correction in the S&P before it continues up any higher. And the problem is that most people that have gotten into real estate since post-2010, anyone that got into real estate post-2010, they are used to an up-only market that has been, one, inflated by the US government printing trillions of dollars, but two, they have not seen a real correction. And that is what we are about to see here very, very soon. Now, one thing that many people do not know is that the government is still giving stimulus right now. A lot of people say that there is no subprime mortgages, so it's impossible to have a 2008 level scenario. FHA loans are already our 2025 version of subprime. We already have subprime mortgages. FHA loans require you only to put 3.5% down. They allow a lower credit score. It's subprime mortgages. Yes, it is government backed, but as you can see, our government is having a hard time already paying its own debt right now. So right now, over 16% of all FHA mortgages are already delinquent right now. We have millions and millions of people that went and bought multiple Airbnbs at valuations that they are not sitting there anymore. A lot of the Airbnbs are not cash flowing anywhere near what they were before. And Americans are strapped right now. If you look at the average American has $7,200 of credit card debt. The average American has $8,200 of negative equity in their auto loan. Right now, we are sitting at 12% delinquency on $1.2 trillion of credit card debt. All of these numbers that I'm telling you are numbers we have not seen since back in 2008. The market already started to crack months ago. And before I give you this data that shows you the exact date to be looking for, something that a lot of people miss the fact that when you see the stock market crash, a Black Monday style stock market crash, you can see that happen in a day or two or a week or two. You're not going to see the housing market crash in a week or two. What you're going to see is you are going to see a slow bleed with some smaller periods of speed that come up on the crash. So the housing market started, when we talk about the collapse in 2008, everyone thinks about 2008. Well, the truth of it is that housing market did not find a bottom until 2012. By the time the housing market found the bottom, the Dow Jones and the S&P were already back up reaching the highs that they had previously lost back in 2008. So the housing market bubble, it's already popped. We're just waiting for the accelerated speed to happen, which is inevitable. It's going to happen. One of the big dates that you can look out for is what's coming in October of 2025. I said that there's still a form of government stimulus out there, and a lot of people don't know this unless you have an FHA loan and you're behind on it. Something that Biden put into place is there are millions of people with FHA loans that are unable to pay right now. And what they are doing is there's a program they can call and they can have the government give them a loan to pay their mortgage. And there's a lot of people that are using this. Well, that ends. Trump is ending that in October of 2025. It came about during COVID. Now, that's just one piece of data, and that's just going to be one more piece of kindling that goes to light this fire that we are about to see happen before our eyes. For anyone that thinks that there's just a bunch of people that want the housing market to crash for no reason, if you stop and look at how our just normal economy is right now, the stock market is not the economy. That's a big misconception that millions of young Americans have nowadays. They say, well, the S&P's at highs, so we must be good. Well, the truth is, before every recession or every major market crash or anything bad financially that's ever happened to this country, the markets were always at highs before the final bad thing happened. The Great Depression, the markets were at highs they've never seen. The Great Financial Crisis, the markets were at highs they've never seen. Black Monday, the markets were at highs. You're always going to have the markets at all-time highs. You can't have a housing crash if the housing market wasn't heated up and on fire at one point in time. So seeing things at highs, regardless of the scenario that we're in right now, seeing any asset class pushing to constant all-time highs, that should bring you a warning of caution at any point in time. Something that our culture is very scared of, which is not good, is bear markets and bull markets. No matter what, if there's a market where asset prices can go up and down, you are going to have bull markets and you are going to have bear markets, some significantly worse or significantly longer than others. There are longer bull runs and there are longer bear markets, and some are quite a bit shorter. For example, when Biden was president, first year, we saw the stock market crash many stocks by 40, 50, 60%. The crypto market crashed, but we saw the housing market continue to either go up or stay stable where it was at, and we have not seen that pullback yet. It's very similar to what we saw back in 2008. Stocks went and dipped completely off and crashed. The housing market started to collapse, but it did not actually find a bottom until all the way in 2012. If you are a person that likes to look at data of yourself and try to understand how these asset prices move, something very interesting you can look back on is what actually happened to home prices in 2008. There's a home that I keep track of that was built in year 2000, okay? And if you bought this house in 2008, it had gone up to about $500,000. Started at about $200,000. And if you bought that house in 2008, well, the housing prices collapsed after you bought it. So you were sitting at about a $300,000 price evaluation for that specific home. It took all the way until about 2017 for home prices to rise back up to the level of where you were seeing valuations that would allow you to sell that home for what you paid for it back in 2008. And I think that's the case for what we're seeing right now. Things go in cycles. Prices go in cycles. The stock market moves at hyper speed with the volatility we see nowadays, but the housing market, it did go up quite a bit quicker than it ever has in history, which tells me it might go down quicker than we've ever seen in history, but it's still gonna take a lot more time than something like the stock market. Now, there's a couple groups of people when it comes to the situation we have right now. There are people that are in their homes and paid too much for it, or they are in the real estate market and they are telling you that the housing market's never gonna collapse. There's no way it's gonna collapse. 2008 was a one-time deal, and obviously home prices are gonna continue up. If you don't buy right now, you are gonna get left out of the market. Well, and then there's other people that missed out on buying a house or were smart enough to not buy a house when evaluations were what they were at and interest rates are what they're at, and they're being patient. And obviously those two groups of people, they have two very different motives. But if you stop and you look at what has actually happened, if you stop and look at what happened to prices, how fast did they actually go up? What is happening with people that are in their homes but hate their homes right now? There's a lot of people that say when interest rates go down, we are going to see home prices go up. Well, I have two scenarios and two questions I want to ask you about that. One, we saw interest rates very low for a little over a decade after the 2008 collapse, and it took quite a while for home prices to continue to go back up. In fact, the Fed cut interest rates into the collapse in 2008, and in 2009, not many people thought it was a great time to buy a home. On top of that, there are millions of people that are stuck in their homes right now. And what I mean by that is they've either had children, their jobs moved further away from them, they've outgrown their home, and they would like to have a different home, but they have a 2% interest rate, and their mortgage would double or triple if they bought a new home. These people are going to sell by the millions. Interest rates being lowered is going to allow even more inventory than we've ever seen come onto the market. Now, speaking of inventory, right now, there are 500,000 more homes on the market than there is buyers in the market. This is the biggest gap that we have ever seen in the history of the market since this has been tracked. So you're looking at way more homes on the market than we've ever had without the sellers there to buy it. And then there's one more group of people that you want to watch in this process, and that is the boomers. Baby boomers' wealth is stuck in real estate. So yes, you could go and, pull money out of your house. You can take a loan and pull it out of the house. You could do a HELOC. You can do different things like that. But interest rates are very high right now. A lot of boomers are going to be selling their houses, and they're going to be downsizing so that they can get into a smaller house, and then they can also cash out. There are millions of people in different classes that are waiting to sell right now. There are millions of people in FHA loans that are being artificially propped up by the government right now. And a lot of this is going to be coming to head very, very soon. Now, me personally, me and my family are looking to buy a house going into the end of this year and the beginning of next year. I think that is going to be a great time. We were looking at the possibility in 2025, but we are going to be patient. Real estate has been a very profitable venture in my life, and I do think that it can be a great investment. It's not always a great investment, though, if you are not patient. There are millions of people that'll tell you it's not when you buy, it's when you sell, and you can just refi whenever you want. I'd be very careful of listening to that jargon, because those same people, they cannot guarantee you when interest rates are going to go back down or what the prices or assets are going to do. If you were that person that bought in 2008, it took you until 2017 for the same evaluation to come back up on that same home. If you've already had patience, having just a little bit more patience is going to pay off tenfold in our current situation. Thank you guys for watching this video. We have moved over from TikTok over to YouTube to give you guys longer form content. Over the past year, we've gotten 70 million views on TikTok, 130,000 followers. It has been a fantastic thing. This is a Christian page. You don't have to be a Christian to be here. Thank you guys for supporting the new page. Make sure you like and subscribe, and I'll see you in the next video.